see if I can. Hey everybody, and welcome to the final Sunday market update of the year. It is certainly one a little bit impacted by a number of things, including Christmas and a little bit of COVID here and there as well. We'll be having the team today will be initially we'll have I expect Julian will be in a few minutes to do macro market update. After that, we're playing Orlando's video on US dollar. I'll have a little bit of a look at oil, and then Geoff is in to do some technical overview for us. Been without doubt a bit of a crazy week. And I was just about to log into my Fusion at the start of the show, and looks like the Fusion server is down. And I can't get in. That is a bit of a problem, isn't it? So we will do without charts for now until we get the rest of the team in. Julian, the shirt tells me Christmas party. Am I right?
Yes, Paul. It was a Christmas party, and a very enjoyable one as well too. A little early, and I didn't stay late, so left at 9 o'clock, which is not so bad for a Christmas party on a Sunday. Yeah,
mate. You're Aucklanders again. You're allowed out now, right? So you're everywhere, right?
Yes, for the time being, pre Omicron, we're allowed out. So hopefully that will continue, and we'll try and keep it out the country as best we can. And our erstwhile Prime Minister will do an amazing job of keeping it away from all the crowds.
Yeah. No, they've done an amazing job of keeping Delta out as well, to be fair. Oh no, they haven't, have they? Sorry.
I'm just letting that one go, Paul. Nice try.
Omicron, mate. It's the story in the background, isn't it? I want to talk about all of it later on because, the news remains the same, highly transmissible, not as serious, but governments are going to step in and they are going to take steps here. And if they start closing down economies, we are going to have some interesting things to deal with in the markets. And it really is again, I'd say, interesting time. It's I'll tell you what, Julian, I reckon most of the world's going to celebrate Christmas. I'm not so sure they're going to get to New Year without a few more pretty serious lockdowns here and there. What was I reading a few minutes ago? 90,000 cases in the UK, 90,000 cases in the US, including my sister-in-law and her husband.
Yeah, I think you're absolutely right, Paul. And look, I think this is a really interesting time. So we've talked about it on the broadcast group. For those of you that just caught my Trader Cafe, I was talking about it there as well too. There's been a change. The Fed has pivoted. Now, you could argue that this is the Fed getting its act together, or you could argue that this is the Biden administration getting frustrated that inflation has got out of control, which means people who vote Democrat don't like inflation. Normally, it's the lower end, marginal parts of society that really struggle when inflation starts to rise. And so it's not unusual to think that Biden would try and do something about that once it gets to the almost 7% level it's got to in the States. So look, this is the really key thing. So the Fed has pivoted as a result of this, and I think that this is a significant change for the markets. Now, why is it a change? It's a change because liquidity is going to be withdrawn at a faster rate than we thought it was going to be at the beginning of the week. And also because other central banks around the world are doing exactly the same thing. So that's one part, that's one leg of the equation, right? The second leg of the equation is what is the government doing? Okay, because there's two aspects to liquidity. One is the liquidity that's being provided by the central banks in terms of QE and in terms of lower interest rates. And the second leg is the fiscal stimulus that's being applied by the governments, because during the COVID pandemic, of course, we've seen a significant rise in fiscal stimulus around the world, as well as in America. Now, to put that in some kind of perspective, right, because what we love is perspective here, we expect that somewhere down the line next year, we are going to see about a negative 3% impact on GDP of the fiscal policy from the Biden administration. So, yes, they're spending money. Of course, governments always spend money, but compared to last year, it's going to have a negative 3% effect. So combine that with rising interest rates, combine that with a QE program that has been stopped, and it doesn't take you too long to sort of figure out in your mind that my favorite topic whenever I start talking about markets is liquidity. This is a great quote from Stan Druckenmiller, who said that earnings don't move the overall market. It's the Federal Reserve that moves the market. And they do that because they focus on liquidity. You look at liquidity, that is what moves markets. And all I see in front of us for the next 3 to 4 months at least is, if not 6 months, is declining liquidity. So the question is, what's going to happen next? So when you look at what's been going on in some of the stock markets, it's very interesting. Okay, this is a divergence. So the red chart is a chart of the S&P 500. Special topic here, it's a cap weighted index, which means that Apple, Google, those sort of shares, as they get bigger and bigger and bigger, it forms a bigger proportion of the index. So it looks good based upon just a few stocks doing really well. When you look at the Russell 2000 for the year, we are almost down for the year, right? We're not up the magical 16-17% the S&P is up. So what does that mean? The Russell 2000 is mid-cap America. So the basic stocks that you would normally see in America, stocks under I think the threshold is $5 billion, I think. So in terms of valuations. So this is where traditional American companies tend to be, and they try to break out in November to a new high. They failed, they collapsed, and they've now collapsed back. We're sitting at the bottom of the trading range. Doesn't look good from a technical perspective. So you got something going on here, right? There's the breadth of the market. There's a momentum, bearish momentum signal going on. There's a bearish momentum signal going on that that I think at the moment suggests to me that the Christmas rally may be a little bit muted if we have it. And in all likelihood, it means that Q1 next year is going to be a little bit tricky for stocks. So if it's tricky for stocks, what else is on the equation? Now, you know, there's the gold market as well too. We could go look at gold. We could go look at oil. And I know we're going to have a look at the currencies further on, but just bear in mind that this is really where I see things right now, right? So I see liquidity falling away. I see the risks rising for stock market underperformance. It could be a rocky start to next year, whatever happens for the next 2 weeks. And I hope the market rallies like it normally does this time of year. So that's good. But I think after that point in time, financial conditions are going to be tightening quite quickly. And that's going to have a negative impact on quite a few asset markets, most notably the US stock market. Probably, Paul, I think I'll leave it there. That's my sort of my macro overview, but it was a big week, and it's a big week for these reasons, right? The Fed is starting to move quicker. The US government is starting to wind back the fiscal stimulus as well too. This is like you've had the wind at the investors' back for the last 18 months, and now that wind's been taken away. Now it's becoming a headwind.
It'd be really interesting, Julian, to see what happens to these Robinhood type people who have come in on retirement savings and invested. Money given to them by the government into these markets, and really they haven't yet faced a market that is anything but up in a straight line. And be interesting to see how they deal with what's going on as well.
Yeah, look, actually on that topic, that's a really good point that you're making there, Paul. The reason why I'm just chatting just for 2 seconds is I just want to show you guys something, because I think this is worth having a look at. Let me just share my screen over here just for 2 seconds, right? This is, hold on, let me just move you guys out the way. This is the chart of Robinhood, if I could find it. Here we go. And so since the IPO, Robinhood got launched at about $40, went all the way up to $80. Now it sits at $19. Okay, so that's what the market's seeing at the moment. The market is seeing that retail participation starting to walk away from the market. So two things are happening here with this valuation going down. It means not as much is being traded. And if it is the same amount that's being traded, it means the information isn't as worthwhile as it used to be before. So Robinhood aren't getting paid for it. So this is an earnings problem that Robinhood has. I don't think this is confined to them. I think retail participation is slowly withdrawing from the market as the market, generally speaking, apart from the majors, starts to struggle. That's what we're seeing out there. So I thought you guys might like to see that chart. It's just a really interesting sign, and I view these things as leading indicators for what's going on in the broader market. It's not just here; we're seeing it quite a few other markets as well too.
So, man, if I can hold you for one more thing, my recollection is about 6 months ago you told us that for the first time ever, retail volume was higher than commercial volume in the markets. Do you know if that's still the case?
Good question. I'm not sure, to be honest with you. I know that the amount of retail participation this year has been absolutely extraordinary. So I think there's the investment this year by inflows into mutual funds and other funds, I think, has been something like the bigger than the last 19 years combined. So it's an extraordinary participation, right? But yeah, if you look at what's gone on, the S&P is only up 15%. So that sort of suggests to you that maybe that money is not being used wisely. Maybe it's being spent on other things. I'm not quite sure. I can show you a bunch of different sectors of the US market where we can see stocks that are not doing very well. Right? This isn't a widespread, broad-based bull market rally. This at the moment appears to me to be a few major large cap stocks holding us together.
Yeah, that's it, right? Maybe 90% of stocks in the US at the moment are squared down, and 10% of the big ones are up, and it's making it look like it's going up when there's the grassroots are still hurting a bit, right?
Correct. Yeah, exactly. So that's why you see Robinhood trading poorly, because that retail participation, if they have been involved, they aren't anymore, right? They're beginning to leave.
Cheers, Julian. Thank you very much. And thank you for your amazing sharing for the entire year. Great to have you along, mate. And thanks for coming on a Christmas shirt to our last show of the year.
I did my level best. And look, guys, have an absolutely fantastic Christmas. I think this is going to be really interesting trading Christmas. So maybe don't put the screens away for the next couple of weeks. I think it's going to be fun. There's lots of things happening. Have a look at that Trader Cafe to get an outlook on all the markets. I did my Super 7 today to give you a good idea of the technical picture. There's lots of things going on there. Lots of tradable movements I think are going to happen the next 2 or 3 weeks. So, Paul, look, have a fantastic Christmas to you guys and everybody out there if you're listening. Thanks for listening to us through the year and listen to me through the year, and best wishes and great trading for the new year.
Cheers, Julian. Thank you very much. If you're looking for Trader Cafe, you'll be able to pick it up on YouTube, Actions 12th, Facebook, or Twitter. All recorded for you guys there, so you better grab that from there. Thanks again, Julian. Have a great evening. Say hi to Yvonne, and thanks for popping in tonight and helping us straight after the Christmas party. Really do appreciate it. Cheers.
Cheers, Paul. Cheers, everybody.
Rightio. So one of the various things that's driving this market is the US dollar. Right now, we're going to play the video from Orlando. He has thankfully just got a negative COVID test a couple of hours ago in San Francisco at the moment. So some good news there for Orlando. One of his family he's staying with does have Omicron. So a lot's going on in the world, but let's hear from Orlando how he views the US dollar. Mike, if you could play that for me, that would be great.
Hello traders, Trader O here. Let's talk about the US dollar on a quick 5-minute video. So if you remember last week, the Federal Reserve came out extremely hawkish on the release of their monetary policy report. They did not hike rates, but if you read the report, they said that they were going to start doubling the taper of their bond buying program starting on January, right? Which is extremely bullish for the US dollar. Now, they also said that they were going to hike rates at least 3 times, I think, next year, which is also very bullish. That's why we had those moves on the Japanese yen to the upside, metals and Ethereum and Bitcoin to the upside too. People, investor hedging against inflation, because Federal Reserve saying that, and reading between the lines, we know that we are going to be facing high inflation next year. So we're looking for US dollar longs and longs only. Let's have a quick look at the daily chart from the lows that the USD or the DXY printed in May 25th to the highs in November 24th. We've seen a rally of 8.22% on the DXY on the US dollar, right? Erasing all of their losses after the break below of this massive base. So this is the key level that I was looking at, right? This massive base on the DXY at the 95, let's call it the 96 level, right? At the 96 level. So anything above the 96 level should be bullish. Friday's candle was extremely bullish, so right now we have missed the boat on the US dollar longs at the open. But let's have a look at the 8-hour chart, maybe the 4-hour chart. No, the 8-hour chart is fine. Basically what I'm looking at here is a no trade range, right? Well, it can be. It is a no trade range in the sense that price right now is in the middle of it. Should the US dollar come down to retest the 96 level again, here is where I would look for buys. And of course, that I will be looking for buys at the break of this is November highs, right? At the 96, no, 96, 97 level. So basically, only buys. If we have a test and a rejection here of November highs, I will not be looking for shorts. That's a crazy idea in such a bullish market, technically and fundamentally. So heads up to that. Uh, well, the possibility of a pullback is much, much lower than the possibility of a breakout. But still, these are the two plays that I'm looking at: a pullback to the 96 to buy, or a break of the 97, a retest of the 97 to buy. Again, that dip.
There we go, and thank you to Orlando for his input. Look, I'm going to share screen you a slightly different chart to normal. I want to talk a little bit about oil today, and look, I only touch on this momentarily because I think it's the most interesting market in the game right now. And the reason I think it's such an interesting market is because this is the monthly chart for oil, and this move here is what Delta did to the price of oil. Now, spot oil got to about 530, but futures contracts got well into the negatives. It actually cost to hold oil for a period of time during Delta. And here comes Omicron, and what's going to happen? So one thing we do know is going to happen. I think you've got to say it's inevitable now that case numbers around the world are going to spiral. We're going to see record numbers of COVID hit the world in the next days, weeks, months. Looks like UK's already at record numbers. I think Sydney's gone in 2 weeks from 10 cases a day to 2,000. This is going to be everywhere. We've got people in our team in the UK with COVID, not on the direct trading team, but around the direct trading team with COVID. We've got people in the US with COVID. It has just gone bang. And does that mean that oil is then going to come back down to here? And my answer to you guys on this is just a trading opinion. I think it's highly unlikely that we will see the move we saw for Delta. I think it's highly unlikely we'll see that repeated for Omicron, and possibly because while governments are going to freak out, Canadians are closing their borders and other countries are coming. I think France has closed their border to the UK, and New Zealand will close their borders to everyone again pretty soon. You can guarantee it, right? But the death toll is not so bad, but that's not my point. There will be an emotional reaction from the governments, and there will be an emotional response from traders. But the reason I don't think it's going to go down here is because this time we've seen it's a new chart. Let me we've seen this move here. And what I think we're likely to do is I think the fact that we've seen this move here means that most traders are going to be looking for a buy. If Omicron comes in and pulls the price of oil back further, that traders are going to look for a buy. And look, we got it right. We did a piece in here. We talked about buying it. I think it was $12, $9, $6. And that if you did that, getting out around 40, if you did that, you should have made a lot of money on that trade. And we're too early to be saying those kind of things yet. But my suggestion for you is to be looking for oil to pull back, but not down to these kind of levels here. I would be personally looking for a buy somewhere around there. Is that around the $41 mark? Hard to read on this chart, but yeah, that number there would really interest me. Maybe just push it up a little bit. Around the $42 mark. If we see oil collapse back because of Omicron, I think we're going to see buyers coming earlier. So I'd be looking to maybe start a position around this level here. Maybe if it wants to continue going down, I might add a little bit of money around that level there. It might be pretty small at this stage, because one of the things I want to remind you guys, I don't know if you need to, if you're looking to buy these levels, do it really small. But one of the things I would remind you guys is that if we're going to see an $80 move in oil again, there's no need to rush. You don't have to get the whole position on early. You can, instead of just scaling in on the way down, you can just wait for the big move up, wait for the retracement, and just trade it straight up from here. I mean, honestly, oil has been the gimme of the year, I think, because of this move up. And look, we did spend a bit of time. We talked about in our piece about this target in this area here. Did spend some time there, but then did take off. So for mine, oil is the most vulnerable in either direction. That's why it's interesting. Can't get short on oil right now for me because if governments don't overact, if airlines stay, if travel stays open, if businesses stay working, oil will stay up. But so I think it's one of those really interesting topics right now because it could go either way. And it could go quite a long way. I'd suggest to you that I talked about a target all year on oil around $100. It didn't quite get there, but I am thinking, 12 months from now, I'd expect oil to be about maybe 120, 130. And this move up to have continued. Maybe there'll be a big pullback in the middle of it because of Omicron. But what it means to me is we are looking for a buying opportunity on oil. But what we are looking for is to really sell out and give us the best possible buying opportunity. And we certainly aren't expecting that to be at $5 this time around. I would be if oil goes to $5 this time around, we are in a different world of pain, in my personal opinion. Rightio, thanks for that. Let's go on from me and let's get a technician's view on the world, eh? Geoff, are you with us?
Hey, Paul, I am indeed. Hi to you, hi to everyone, and hope everyone's in a merry, merry mood despite the Omicron thing going on. I guess you can't ignore that, but Christmas is here, so let's put a smile on our face, eh?
Mate, I'm going to ask you a bit of a somber question, mate. How far are you away from Devonport?
Yeah, about 250 k's.
It's still a long way. Mate, are you wearing yellow
It's
for
a long way,
Australia today?
but beg your pardon?
Are you wearing yellow for Australia today?
No, it's a yellow. I thought it was more like baby poo, but depends on what the babies had to eat, I guess. At the end of the day, look, Devonport is horrible, and the whole state is in shock pretty much. And yeah, where that goes from there, there's either a regulatory problem or there's a compliance problem. Either way, it's not going to be a good outcome.
Oh, mate, I think we've already dealt with the worst outcome we can come from that, mate. Sounds terrible. But as you said, mate, Christmas is coming. I think we are going to have a Christmas. It's going to be a good Christmas. Technically, Julian's just said trading over Christmas, New Year's ago. Now, I've just been saying everybody don't do that because I like to have a break. But really, if the money's there, you take the money. And before we come to you, I'm just going to have pop the link in for the Christmas special on Wednesday night. We're doing a special Trading Experts on Wednesday night, 6:30 to 7:30. That's our last show of the year of any show. We are closing up straight after that. Literally, we will do Trading Experts Christmas show. We're giving a little bit away here and there, a few specials for you guys. Join us on Wednesday night. It should be a great show. And register now. Make sure you do turn up. And it will be the last thing we do for the year. Mate, we'll leave Christmas. Let's talk about technical setups. Julian's saying there's opportunities ahead. What do you see technically setting up for us as we go into this week?
Yeah, look, I'm quite buoyant myself, and normally I would definitely have a break over Christmas, but I see things coming into really nice positions to trade from my technical perspective. This is one of them, and I think we're kind of in, and have been in, maybe that's about to change. We have been in a bit of a Mr. Miyagi market, as I call it, risk on, risk off, and that seems to be the case day in, day out, as I try to get not so much breakouts, but follow-throughs. Follow-throughs just don't appear at the moment. But the good part about that is it gives us the opportunity to trade false breaks, which is one of my favorite things to do. Now, this week, we have a bunch of game changer bars, 2, 4, 6, 8, about 9 of them. So I won't go through them all in depth, but I will very, very briefly go through why I'm in a good position if we do get the setups that I'm looking for. This one's Swissy yen, of course, both risk-off currencies. And I'm looking for a bounce last week's weekly pivot, a lower high in here, trade it to the bottom of the range. That simple. There's really nothing complicated about that. Euro Swissy is a little bit different, and you'll notice that the risk-off currencies are very much in play here this week. Very, very difficult to trade this one, so I'm not going to stay on it, but coming to the bottom of the range, you're looking for a bounce, maybe a higher low, but not that interested, to be honest. Euro yen, similar scenario, of course. A little bit better because, in my humble opinion, that's the weekly chart. And of course, it is a game changer bar with a new high and closing on its low. terrible place to get into the market if you want to trade that bar. However, there may well be an opportunity to get a lower high here again. And I think that's what I'd be looking for. Already I'm seeing this break and retest of what you would call a neckline. So I've really got a double top sitting here. It's broken that neckline, it's retested that neckline, and last week's bar looks to be on its way south. Certainly not the worst trade to take, but you've, in my humble opinion, got to get something in the bank before these lows in case it just goes the other way. But that's a good one. Euro yen, euro dollar, tough one, but it is again a game changer bar where did we bounce off the monthly pivot? I don't know that we didn't quite make it, I don't think, but you can see it's in range and tough to go short here, really tough to go short. I don't really want to trade it until it gets to the bottom and gives us a false break, or B, the top and gives us a false break, or break and go. Either way, I think that's the one that you've got to wait on. The weight of expectation, of course, is the US dollar is going to continue to rally. Again, another neckline break here. I like this one because it's got 1, 2, 3 false breakouts in a row. False breakouts of probably that level there. So false break, false break, false break. 3 little Indians in my book. And we have broken the neckline barely, I've got to say, and get in right here. But this bar here looks interesting to me on the weekly chart. I think there's worse trades to take than getting in under here. Again, you would have to take profit before you hit this low. But I think that's got possibilities. Pound yen short looks good to me. This is not similar. Again, you've got a big double top here. If I go a little bit wider on the monthly chart, you can see the bounce off that monthly trend line to the short side. Didn't quite make it, I guess. And not the best place on a monthly chart to be trading, but it does look like it has broken that neckline again. Similar, I put it out on, I think it was Euro Swissy maybe. And that retest is very, very clear. Bounced off this level again and looks to be headed south. A little bit tough, the tail for last week's bar. Doesn't really give me a full batch of confidence trading that short just yet. But I think, again, looking for that lower high may pay dividend. Kiwi yen's probably one of the best setups. And the reason I say that, again, you've got 3 false breaks to the high side. You've come underneath the resistance trend line. You've retested the resistance trend line. And look, these charts are very, very similar. And rejection bar again off that resistance trend line suggests to me that that's a false breakout and probably an entry underneath that bar. Or if you want to trade the weekly bar, you could trade underneath it, risk above it. And again, you've got to take profit before these lows. So the risk to reward is not great on the first part of these trades, but if they do get going, then the rewards will come. And I think that's probably the way to trade that I'll be looking for anyway. Same chart really at the end of the day. Kiwi US dollar already broken through the break and retest of the neckline again. Probably missed the boat here. And I'm not sure what we'll have to do to get back into that, frankly. We'd probably have to see another false break of resistance on a smaller time frame. But again, we have that game changer bar sitting there. Also interested in pound Aussie, weekly chart showing a clear false break to the downside, or false break of the upside, if you like, and potentially going into, pardon me, reversal. I don't know that that's the case. It's not the strongest one for me, but it does have a lot of fresh air before the support level that you would need to take profit at. So I think I'd be interested in trading the weekly bar, providing we've got no big gaps in the morning. Underneath here, stop loss above, take some profit here. That's a decent risk to reward. And finally, Euro Kiwi on the weekly chart, not a game change bar, but clear bounce again off the weekly trend line. What's the monthly telling me there? Same. I think that's got possibilities, but you're going to have to wait on that. This is just a guess at the moment. And I'd be looking for a definite lower high in here before I look to trade it. It's also showing me the possibility that it wants to break here. So, and that's why we've seen a spinning top sitting there. The market's just not quite sure either. I'd need to see a directional bias here, and that bias at the moment to me favours a lower high. And if I see that lower high, I would look to trade it short. So there you go. I think there are some possibilities coming up. There's some great ranges forming or have formed, and there's some great potential reversals and follow-throughs upcoming, I believe. The charts look very, very interesting to me on those risk-off pairs.
Cheers,
so there you
mate.
go, mate. That's my 2 cents worth.
Cheers, mate. Thanks. They're always worth more than 2 cents, mate. It's amazing to me that, what was it? I don't know, Geoff. I think 8 or 9 years ago, you and I decided that we were going to do some free content every week. That we were going to do at that stage. It probably wasn't even a webinar, I don't think. We're just going to do a free thing for people to watch on trading. And here we are, still older, grayer, but still doing it, mate. I really appreciate your support during the year. And look for...
My pleasure, mate.
For those that are with us, I do want to remind you that the Wish AMA, our charity partner, the Wish Coin, their AMA starts in 30 minutes exactly. And it's their Christmas AMA. And they'll be having a number of their charities come into the AMA, talk about what they do with a donation of $50, and then asking people in the room if they'd like to donate any money to those causes, bet a few dollars, and see if we can pull it up to $50 or more for charity. There will be people in there talking to us about feeding the starving. There'll be people in there talking about providing medicine for the dying. And if you can join us for the Wish AMA, I'll get Mai to share that link as well now, if that's okay, Mai. There we go. That is in half an hour's time from now. And obviously, the more, you don't have to donate any money, but if you want to come along, we'll try and make it as light and fun as we can, considering that we're dealing with charities who are facing some pretty ordinary times. So the Wish AMA is in 30 minutes. The Accidents to Wealth Christmas party is on Wednesday night. Mate, will we see you at either?
I'll be there. I'll be at the Christmas party, mate. Absolutely. And I'll have my Christmas shirt on.
Looking forward to it, mate. I've got my my Wish Christmas hat here.
Awesome. Holy dooly. It's like a pair of pants. It's a big one. Very good.
Mate, I really do want to wish you and for everyone who's helped us with the Sunday market analysis for the year, a wonderful Christmas and New Year. I do hope wherever you are in the world, for yourself and everyone else, that there's a really joyous Christmas and some real freedoms to still enjoy in the new year. I do hope that everyone gets a chance to take advantage of it. I would say for me right now, stay healthy, because it does seem to me that COVID is making a bit of a new run at a few things. If you're not in a nice, safe place like Tasmania or Wellington, then I think you need to take real caution at the moment. I think obviously there'll be some fatigue about this, which has been going on for a long time, but hold your breath, might be over in a couple of months with a bit of luck. Mate, once again, thank you very much. We'll see you in the Accidents to Wealth Christmas party at 6:30 on Wednesday night. Cheers, Paul. And to the rest of you, maybe we'll see a few of you in the Wish AMA in about 30 minutes from now. In the meantime, guys, trading over Christmas, look, there may be great opportunities, but do remember, volume is down, and it means that markets can be a little bit choppy. So take your time, make good decisions, and stay calm. And if you do that, it'll all work out at the end of the day. Have a very Merry Christmas, and may 2022 bring you all kinds of joy, happiness, and wealth. Cheers, everyone. See you later.